Have you ever wondered how much you would have earned if you invested in HDFC Bank at its IPO? A journey back to August 1994 takes us to the inception of HDFC Bank, a landmark event in the Indian banking sector. HDFC Bank was the trailblazer, the first to receive an in-principle approval from the Reserve Bank of India, the country's central banking institution. This was a green light for setting up a bank in the private sector, an uncharted territory at the time. Now, let's delve into the bank's initial public offering, or IPO. The anticipation was palpable, the stakes were high, and the results? Well, they were impressive. HDFC Bank made its debut on the stock market, its shares available to the public for the very first time. This was the first step in a journey that would see the bank's stock price skyrocket in the years to come. Now, let's talk about how the bank's stock price has performed since its IPO. Since its IPO, HDFC Bank's stock price has seen a significant upward trend. The bank's initial public offering, or IPO, was a landmark event that marked its entry into the world of public trading. From that point forward, the financial journey of HDFC Bank has been nothing short of remarkable. To provide context, let's take a stroll down memory lane. In the early years following its IPO, the bank's stock price remained relatively stable, with minor fluctuations reflecting the economic climate of the times. However, as the new millennium dawned, HDFC Bank's stock price began to showcase a consistent upward trajectory, a testament to its robust business model and relentless pursuit of growth. Fast forward to the mid-2000s and the bank's stock price experienced a significant surge. This was largely attributable to the bank's strong financial performance, its expanding customer base, and the growing trust of its shareholders. The bank's strategic decisions, its commitment to digitalization, and its focus on customer-centric services were key factors propelling its stock price to new heights. However, like any other business, HDFC Bank was not immune to market dynamics. There were periods of volatility where the stock price witnessed dips influenced by macroeconomic factors and global financial crises. Yet, the bank's strong fundamentals and resilient approach ensured a swift recovery each time, further solidifying investor confidence. As we moved into the 2010s, HDFC Bank's stock price continued its upward climb, reaching unprecedented levels. This period saw the bank further strengthening its foothold in the Indian banking sector, with its stock price reflecting the bank's successful endeavors. Today, the bank's stock price stands as a testament to its journey of growth, resilience, and commitment to stakeholders. It mirrors the bank's robust performance, its strategic initiatives, and its ability to adapt to changing market landscapes. In summary, HDFC Bank's stock price performance paints a picture of consistent growth, punctuated by periods of volatility that were met with resilience and strategic acumen. It's a narrative of a bank that has not only weathered storms, but has emerged stronger, its stock price reflecting its unwavering commitment to growth and value creation. But what if there were stock splits? Let's find out. Over the years, HDFC Bank has also undergone a few stock splits. A stock split is a corporate action that increases the number of shares in a company, reducing the price per share. It's like cutting a pie into more slices. You still have the same pie, but now there are more pieces to share. HDFC Bank's first stock split occurred in 2009. The bank split its shares in a ratio of 1:5. This means that for every single share held, shareholders receive 5 new shares, reducing the stock's price proportionately. Another major stock split occurred in 2019. This time, the bank chose a 1:2 ratio, doubling the number of shares held by each shareholder. These splits not only made the shares more affordable, but also increased their liquidity, making them more accessible to smaller investors. Remember, while stock splits change the number of shares and the price per share, they do not change the overall market capitalization of the company. The pie is still the pie, just cut into more pieces. Now, let's calculate how much an initial investment in HDFC Bank at its IPO would be worth today. If you were an early investor in HDFC Bank, your investment could be worth a substantial amount today. Let's consider a hypothetical situation. Suppose you had the foresight to invest in HDFC Bank at its initial public offering. With the price at which the shares were launched, you bought a certain number of shares. Over the years, the bank has grown exponentially, and so has its stock price. Now, let's factor in the stock splits and reinvested dividends. Every time the bank declared a stock split, your number of shares would have increased proportionately, thereby boosting your overall investment. Let's not forget the reinvested dividends. Each time HDFC Bank declared dividends, instead of taking the cash, you chose to reinvest them in buying more shares. This would have further increased your total number of shares. Fast forward to the present day, and you decide to sell all your shares. Based on the current market price of HDFC Bank shares, your initial investment has now grown manifold. This is the power of long-term investment coupled with the growth potential of a solid company like HDFC Bank. So, as you can see, an early investment in HDFC Bank could have yielded significant returns.